Yo, yo, yo. Welcome back to the channel. Just wanted to do an update on AMC. And I'll share this tweet with you because I think it's going to be relevant going into tomorrow's trading day, which is going to be December 22nd. Obviously, markets are closed on Christmas Eve and Christmas Day. So we have 2 more trading days in the week. Well, Christmas Day is on Saturday, isn't it? Yeah, so I guess it would have been closed anyway. But yeah, so in observance of Christmas, markets are closed on the 24th. Just remember that. Options all expire on the 23rd this week, like most of your options. Yeah, I just wanted to share this because during the day I tweeted this out saying Fonostradamus. I was kind of joking, but I saw the potential here that this was a distribution and we were going to get somewhat of an equivalent potential accumulation pattern to play out here. I also just tweeted like a meme saying I'm not going to change the line. I'm not going to change the line no matter what. So this is how we ended up at the end of the day. I don't think I had the line saved in my chart. Oh, let me zoom out here just so you can see the power of, technical analysis and being able to look at charts in this way. And this is really what I was just trying to exhibit is, you can make these sort of you can imply these sorts of movements. And regardless of if this was a short-term redistribution or an accumulation on the chart, and we'll look into that and get a little bit closer in and see what we think about it. But regardless, you can get a good idea of the intraday price movement when you look at charts in this way, in my opinion. So I think there's great value in that, and I think that that's an important thing to be brought into the community. I know that a lot of the narrative is just buy and hold. It's that simple. And to a certain degree, I agree with that. But I think that takes away from a lot of people who are like me and they're really analytical and in their investments or in their holdings, they want to understand what's going on a day-to-day basis, especially from a price action standpoint. So I just wanted to point that out. I mean, I thought it was pretty fun. I was having fun with it. It's just a meme. Like, I would never trade based on some guy posting a chart with a line on it on Twitter. So, like, I wouldn't buy short-term options or anything like that unless you had your own conviction in that way. But if you're new to technical analysis, I think that there's a lot of value for you to gain yourself in learning these sorts of approaches to the market. In my opinion, I could be totally wrong, though. Obviously, none of this is financial advice. Do with this information what you will. So let's look at AMC. Let's zoom out a little bit, maybe talk about some of the key things here. So in my previous video, I talked about these key support and resistance levels that I drew out here in blue. For some reason, some of them got messed up, it looks like. Let's see. So oh, okay. No, actually, this looks good. This line got moved somehow. Probably just like bad fingering with my phone, right? Yeah, so right now, we're pretty much sitting in the same spot that we were a few days ago, for the most part, where we're trading in this upper resistance. Basically, it's like a market block, right? So like this is kind of where bulls and bears historically have decided to create, right? So bulls at this point in the trading range said, nope, we're not going below here, and then eventually here, bulls decided. Bulls were like, oh, we're gonna protect the zone, and then you had this sign of weakness and then an eventual breakdown here, where bears took control and sent us into this lower trading range. Since then, we've popped out of there. In my opinion, this shorter time frame here is very indicative of accumulation. You have very high volume green days. Again, I mean, we can touch on the on-balance volume. You can see that. I mean, it's pretty much in a parabola on the on the 4-hour chart. I mean, this is a very aggressive upside. I tweeted out saying this, but on balance volume is now sitting on the 4-hour chart, at least, sitting higher than it was in June on the peak. And if you're not familiar with on balance volume, basically the idea is, well, not the idea, it literally is calculated this way. Whenever you have a candle, if it's green, the volume included in that candle is added to the balance. And if it's red, the volume included in that candle is subtracted from the balance. And the reason that this is something that you should look at, in my opinion, is because it can be telling that perhaps smart money is acquiring shares or distributing shares when the price is going in the opposite direction. And so this would be an example, right? You would say, look at the price trend since November 8th, that local peak in November 8th, right? You have a very aggressive downtrend here. Obviously, we went from as high as $47 all the way down to about $20. But at the same time that that's occurring, on balance volume, so let's get that peak on on-balance volume, is in this rapid uptrend, right? And I got a response on Twitter whenever I posted this and said, oh, this is concerning because maybe it's a sign that it's the top, right? But what you have to understand is from an overall basis, when you have price in a downtrend in this way, but the on-balance volume is going up, most of the time it's going to signify, and I would be interested to see some examples. So if anybody has any examples of this not occurring, I'd be interested to see them. But this is a signal that probably there are some retail hands that are being shaken out because the price is being driven down. I believe that institutions control the price action on almost every stock in the market, if not every stock in the market. And so when you see this sort of trend, most of retail is not looking at on-balance volume. They're not interested in the volume price trend. I mean, it's just as simple as that, right? Most retail traders are behaving out of emotion. They're looking at the price chart. Perhaps they're looking at a volume indicator, but for the most part, they're not going to notice that overall trend, in my opinion. I could be wrong, but that's how I see the market. I think institutions have used this opportunity to shake out weak hands that were remaining. And that's why my conviction is currently that we have found a local bottom. And we'll talk about the scenarios. And also, I was getting responses on my video saying that I was being bearish my last video, but I felt that I was being relatively bullish. I talked about how probably you're seeing price roll over a little bit, and I still think that you're seeing that, in my opinion, and that you're going to come back down and maybe retest this like $26 block, right? And I don't think that saying that there's short-term downside necessarily means that I'm being bearish. I think that what I'm trying to say is like, okay. So, and I tweeted this out before too. Even when AMC was going straight up, right? Even when it was going straight up in this seemingly never-ending spike up in price this is being generous, from $12, right? From $12 all the way up to $72, you can see here that you have significant Fibonacci retracements, right? So if you measure from here, this goes all the way down almost to the golden pocket. This was a move from $36 down to $24, right? Now, would you say that the stock was bearish? Right? It went down 34% in this swing down before it swung back up. See, well, you have to for 200% almost, and you can see here, even in this this more localized retracement right here, and I can zoom in on a shorter time frame and look at it, but you'll get the idea. Just look at it. Here, right? This is another like localized big swing down. I mean, so if you were holding the stock, right? If you had this is a 13% swing down. I mean, that's a significant swing down. Okay. But then it went on to do probably well over 100% in price, right? What was it? So we went down from 32.78 down to 28.50-ish. So you can be very bullish and still have retracement. The reality is that these algorithms that trade these stocks are going to respect Fibonacci retracements. Like, in my opinion, I mean, obviously, I'm not in there coding them, but I think that the algorithms have the ability to consider many, many indicators, probably more indicators than any human will ever be able to consider, all simultaneously, and react to the price action in real time, right? So for me, like, let's say that this ends up being the localized top, okay? Local top, right? At this $32.29 cent level, and this is your localized bottom. Like, this is going to be the bottom before AMC has a really aggressive move up. Let's just assume that that's the case, because in my honest opinion, you know, and I said this in my last video, over the course of the next few weeks or months, I am expecting now that this does become the volume because of the volume price trend, right? I mean, we thought that on this downtrend that this was super high volume, and it was. We hadn't seen this sort of volume since September 30th, right? So it had been months since we had seen this sort of volume. The stock was really not getting a lot of volume in the course of that time. So when we saw this selling volume, I was like, whoo, man, we're going back into another accumulation, right? We talked about this. And it's kind of a meme for the people who hate TA or hate me or whatever. They're always like, oh, the spring within the spring within the spring within the, you know, and I mean, you can think that way if you want to, but I think that overall, the way that we've approached the market since this YouTube channel has existed has been, you know, one of the most balanced perspectives. We've been most prepared for whatever price action was coming, and we did it based on sound, fundamental, technical analysis, right? So, and again, I don't really care about all of that, and I got the comment saying like, don't talk about your comments, whatever, because you know a lot of you guys are here to support me, and I get that. So I'm gonna work on that. It's just like I want people to understand the potential value that's coming here. So again, the scenarios that I see playing out are pretty much the same. Like I sit in kind of the same spot that I have been, where this basically this block right here where price got rejected down and then sent back up. I'm expecting that this becomes, so my bias right now, okay, is that this becomes basically the top of this local accumulation range, and you're going to see us come back down to this price. And I don't know if it's going to happen that fast or if it's going to work its way down to that. I'm still convicted that we do see this like $26 range based on Fibonacci. Maybe we break below this 382 just to tap it. We hang above the 0.5. Maybe even we come down and touch the 0.5 at $25.60. In sort of a panic deal, or maybe even, you know, Composite Man wants to go crazy, send us down to the golden pocket before we eventually retrace. And what this creates is a backup LPS, right? So this is how I would interpret it in terms of Wyckoff. I would interpret this as a backup LPS phase. We then reaccumulate down here. Maybe we bounce around between $26 and $27 before we see our next swing up. And I think that could happen in the next couple weeks. That's my personal bias, right? Not financial advice. And you need to take this information that I'm giving in this video, and you need to balance it against a bunch of other creators, your whoever you like. You know, if you like Lou, go check out what his sentiment is and try and see which one you agree with the most. Just understand that we all have implied biases, right? We all have implied biases in this play and every play. We're all emotional creatures. We can't be completely stoic. So just be aware of that you can be tricking yourself, right? Now, that's how I interpret that move. There is the alternative that I've talked about as well, where this was a selling climax. This was a sell test, and this was an automatic reaction. Now, for the purpose of my videos, and then this becomes a sell test in phase B, all right? And that then this becomes a phase B distribution within a larger accumulation schematic. That's also possible, okay? And if you're not familiar with Wyckoff accumulation, then I guess I'm talking over your head right now. So let me just grab an example of a schematic just so that you know what I'm talking about if this is your first time watching one of my videos. So if this is the scenario, right, and I'm not saying that it is. Actually, I think that this has a lower percentage chance of occurring, in my opinion, based on the volume. But what we need to also understand is that this is a localized accumulation, okay? That this volume that we've seen thus far, although impressive, may just be the beginning, right, of the volume within this accumulation range. And what that means is we could see a hard swing down here, just like you see in the schematic, right? Maybe we bounce like this, we bounce like this, we come back down, bounce like this, and then boom, we create a local spring. We hit this $18 mark, come back, and then we swing back up, similar to how we did before, okay? Again, this is not what I think is going to happen, all right? This is actually what I think is most, like, this is the second most unlikely of the scenarios that I talked about in my other video, in my opinion. But if this does happen, this is actually a really good buying opportunity, and I can make the case for it through Fibonacci. If you measure the Fibonacci retracement level from the buy button collapse all the way up to the top in June, okay, which is being considered by these algorithms, by the way. Okay, I want you guys to know that regardless, I know some people say, oh, it was a black swan event, blah blah blah. I get that or whatever, but you have to understand that these algorithms don't care about like, oh, it was black swan or what. They don't care about that. And I'll show you that they don't care about that, because if you pull this Fibonacci retracement, it actually, the buy button collapse was just a 618 retracement. It actually sat above its local 618, right? Before the algorithm said, oh, look, this is kind of cheap. And they picked them up, right? Picked up shares. What I would say is, you know, if this could occur where this becomes a localized spring, boom, you break below this localized trading range, which I'll draw for you using rectangles. And this isn't me. I already see the guy. He's spreading FUD or whatever. Again, this is just a potential scenario. This isn't like, I don't even think that this is likely, okay? But we have to be prepared for anything. If you're going to remain convicted in a play, I mean, you can see here we are seeing some of that, you know, some of that rejection at these price levels for you know, the local, which is normal, right? Like, this isn't anything to panic about or anything like that. But you can see where price is starting to roll over. You look at the daily candle. The daily candle is a shooting star, plain as day, right? So I think that downside is relatively expected, and I could be 100% wrong about that. I know that, you know, Rico and Colin and the cycle guys, I'm trying to avoid cycle theory, if I'm being honest with you, just because I think that I'm better, like, my role in this is better if I just serve as technical analysis. But look, we hit this 236, bounced right off, right? Maybe we just, you know, bounce right back down. I can't imagine that we just come here and then, like, we just open and go up. I think that probably most likely you come back down at least and tap this 29 again, and then you start to swing up. Not after that sort of daily candle. That would be the more bullish scenario. And then that would be essentially saying that, and this is completely possible too. I mean, I don't necessarily mind this. I know that there's a lot of noise on my chart right now. Let me clear this up a little bit. Sorry. That then this was the backup LPS phase, and we're just gonna be a little range bound here, while we tap, you know, tap this support, boom, before we get sent up. I mean, that's completely possible. I mean, I could see it, you know, but again, if this becomes that spring phase that we talked about, like, if that was to happen, I want you to understand that the volume that you would see on the flip side of this would be like, we think that this is really good volume. This would be like insane. You would see volume like what? Okay, let's go to the daily chart and just see what the daily volume looks like. So, like, our local high in daily volume, like within this local trading range, was on December 17th. We saw 145 million volume. I would expect that if this event was to occur over the course of the next few days or a few weeks, whatever. I mean, this is not a time-based sort of line here, okay? I'm just drawing, like, an example of how the price structure could play out. If this was to occur, I would expect that you would have over 200 million volume by the time you get to at least 200 million. Give me a circle, dude. On this like run up here, And again, don't worry about the dates, just worry about like the structure. On this run up here, I would expect like your daily volumes would be turning into over 200 million, crazy volume. And then by the time you get extended over here, and then you come back and test this, because this obviously has been a significant range. You break above this this $46 level, and then you would, if you came back and you did this and then you swung back up, this swing up, you'd be looking at like 500 million volume. And at that point, you're probably just on a rocket. Like it would turn into this sort of super parabolic move where you just can't even account for how much trading action is going on. Every time you look down at your phone, the price is changing by like $5, that sort of thing. So, you know, those sorts of that's like that sort of, that's how that sort of schematic would play out, in my opinion. So again, this overall, I am bullish. Like I find this, like, no matter what happens with the price, and we've talked about the 1450 kind of scenario, even if that were to happen, I see this volume and this price action that we've seen here, this amount of volume that came in, how volume is just trending in the right direction, right? Like you can see here that you're getting that sort of that curvature. And I know that me and Jen Collado have talked about this before, so I don't know if he talks about this like every day in his videos or whatever, but it's like that C, right? You're getting that like C format, where you're going to start to see volume maybe pick back up and go into a bigger upswing. For me, that's validation. Like retail cannot create that sort of buying pressure. Like they can towards the end of runs, but definitely not at the beginning of runs like that. It's just, retail is just not psychologically in the game that way. People who are apes, yeah, sure, might have been buying aggressively, but you have to realize that retail at large, apes are the minority, right? This is, to me, clear signaling that institutions cause this sell-off and will cause future sell-offs in order to accumulate more shares. And I think that that's evidenced by the on-balance volume, which we'll look at again. Right? And what happened whenever on-balance volume broke its local high last time, right? You can see. You get this crazy sort of parabolic move to the upside. So yeah, I mean that's kind of what I'm expecting. You know, maybe we trade around this range, maybe we dunk down a little bit and then pop back up. And again, like it's not about predicting stuff like that Twitter post. I was totally just memeing. Honestly, I was like, you know, whatever. This is like a way that it could play out, and it played out like really perfectly. But it's not about predicting. It's about looking at the market structure and seeing what we think can occur. And this is just my opinion. So hopefully you enjoyed the video. I know I rambled a little bit. I was probably a little bit all over the place. I'm going to see Spider-Man tonight, so I'm excited about that. You know, everybody's talking big smack. Of course, I'm going to AMC theaters. You know what I'm saying? I'm not going to pull up at no Cinemark. You know, like, what kind of clown would I be if I just pulled up at a Cinemark to watch Spider-Man? Like, come on, man. You got to go to AMC theaters. We're going IMAX, too, so that should be fun. I'm a big Marvel geek. I really like the series. So, yeah, that's pretty much what's going on in my head. If you want me to, briefly, I'll just talk about what that $14 scenario would be. This is just for the people who stuck around to the end of the video, I guess. Again, this is not me trying to close on a bearish note. I got a comment like that. It's like, no, bro. Like, it just happens to be that way. I'm not going to talk about what I think is least likely first in my video. Like, that's just not, that's like just not human nature, okay? But basically, this thesis would be that we are actually in a localized redistribution within the much larger accumulation. And then price is going to get sent down. Now, this would be like some crazy. I know Biden spoke today, and he was pretty, like I think he specifically said that we aren't going to go back to March 2020, which basically I take as him saying, like, we're not going to go to that sort of lockdown, sort of like, you know, whatever, which is really good. But this would be some sort of crazy media event. Like something would come out in the news that's kind of against Biden's sentiment when it comes to that. Maybe some sort of case outbreak or some sort of stuff like that would be happening. I would see this as an ultimate buying opportunity. Like, I'm not trading out of my shares or anything like that to trade back in or nothing like that. I'm just holding because I think we're literally right on the cusp of a big swing up here. I'm buying dips right now, big time. If this was to happen, like I have a little bit in the chamber, like I'm just waiting just in case. Because if this was to happen, and again, the justification just overall for this is that we met our 618 before. Remember, I showed you before with the buy button collapse, right? And because of the amount of retail attention that's on this stock and the media attention that this stock gets, I just there's always the chance that Composite Man, if you guys are in the boat with me on Composite Man, I think a lot of you are. And if you're not familiar with Composite Man, make sure you look up Composite Man Wyckoff and just kind of read about it. But, a part of me always expects the most dramatic, and the most painful possible scenario in this sort of play, because my conviction in the play fundamentally is that I think institutions understand that they can push this price up of this stock, and the amount of media buzz that they can generate and the amount of buzz from retail that they can generate is significant, and they will be able to sell this stock that they bought for $14 potentially. I think that they can sell it for $200+. That's what I believe about AMC. That is my conviction for the next leg up, right? And what happens after that, we're going to have to analyze the volume whenever that takes place, and see what we think at that point. But on this leg up, that is what my conviction is. I believe that Composite Man, a.k.a. bullish institutions in this stock, I believe that they think as long as they keep retail in the game, but they beat them up a little bit to get some extra shares, and again, this is my least likely scenario. I think that this is like maybe a 5% chance of occurring. But if they beat retail up and they send the price in this way, they can shake out basically the weakest hands that are remaining before they just grab it up and boom, you see this big explosive move. And obviously it wouldn't be straight up like this. It would be like we described earlier in the June run. Nothing goes straight up, okay? Except for like Dogecoin those few times. But yeah, or Shiba, right? But yeah, I would expect, like, if that was to happen, I would see that as like, dude, the call options would be absolutely crushed. Not financial advice, because obviously all this stuff that I said just now could be completely wrong. In reality, Composite Man created this sort of environment in order to just keep people holding and keep people buying all the way down so that he could sell the stock all the way down to zero, right? But I don't think that that's the case. I think that institutions just have I don't think that they're done squeezing this lemon, if that's and I mean, I guess some people will hear that and be like, oh, he's not really an ape or whatever. Like, I mean, dude, I'm holding here with you, okay? This is just the way that I perceive the market. I believe that institutions are the greatest interest in the market, and they control the price of these assets. I don't know if that's right or if that's how it should be, but I believe that that is how it is. And so I am looking to swim with the whales and take advantage of that for myself. And then, but look, I'm holding this thing. I mean, I think AMC can definitely go much, much higher than $200, but yeah, just in the short term, that's how I see the price action. So hopefully you enjoyed the video. I know I tried to end the video like 7 minutes ago, but I'm really going to end it this time. I'm going to watch the movie later. Okay, you guys take it. Okay, peace out. All right, bye.